Hi, Steve Sosnick here with today's Interactive Brokers Midday Market Update for Tuesday, April 13th, 2021. Let me run a scenario past you. If I had told you, all things being equal, that we would have a CPI number released that would be higher than expected, and we would take one of the major vaccines off the market for health concerns, what would you say the market would have done that day? Well, obviously you haven't been paying attention if you thought it wasn't up, because somehow right now this market finds the good in all situations. That we'll get into this, but I think, at one level, that's the sign of a healthy uptrend. At another level, it starts to make you wonder, how long can the market sort of suspend disbelief? Let's take the short term first. The CPI numbers were a little higher than expected. Basically, everything was, maybe 0.1% across the board, whether you want to look at the headline number or the ex-food and energy, the core. They were all about 0.1% higher than expected. So you could basically look at that and say, okay, well, the markets were broadly in line, and ultimately the stock market kind of leaves it for the bond market to interpret economic numbers. And the bond market was not particularly perturbed by them, so stocks kind of said, okay, if it doesn't bother the bond traders, well, why should it bother us? So there you have that. The Johnson & Johnson news is a bit more troubling. A lot of what we see in the market right now is predicated on the fact that we will be getting back to normal, at least in the U.S., sometime soon. Let me remind you that we saw the market have a very muted reaction from the beginning, and then the reaction improved when, at least in the short term, the Biden administration said that they can make up the J&J shortfall with doses from Pfizer and Moderna. However, if those J&J doses are being taken up by different shipments of Pfizer and Moderna, that means outside the U.S., someone is not getting vaccinated, because we were probably going to start exporting or letting those companies start to export once the U.S. got vaccinated. It pushes back the global reopening trade, but U.S. investors don't always want to think about that kind of situation, so it doesn't really set us back. And today you have a fascinating scenario, because the stocks that are leading the market are in fact the stay-at-home stocks. So somehow investors are not perturbed or worried enough that we would be staying home, but let's buy the stocks that might benefit if we're staying at home anyway. So as I look at my market monitor, we're being led by Apple, by Amazon, and some of the others that would fit in that. Now, another one that's up today, which is its own particular weird ball of wax, is Tesla. Tesla is up, I would say, largely because Bitcoin is up. Bitcoin is up largely because Coinbase is IPOing tomorrow. Coinbase's IPO is predicted to do better than expected because, I don't know, why not? There's enthusiasm for all things crypto. It's kind of a weird circular logic. I don't really, when you think about it, Coinbase is very dependent upon crypto, though crypto is not necessarily dependent upon Coinbase. Think that through for a minute. Coinbase is the most popular way for investors to get crypto exposure, but the fact that they are going public really doesn't change the supply-demand equation for Bitcoin and the like. But that's a speculative market in and of itself. And so, one good piece of news spills into the other, and they all follow through. So that's why you see, Bitcoin up because of the Coinbase enthusiasm. Everybody will be talking about Coinbase tomorrow. I guarantee you CNBC and the other networks will be consumed with coverage of the Coinbase IPO, and they should be. It's meaningful. But what you're going to see is, a lot of talk about that. That's perceived to, any positive talk is perceived to be positive for crypto, Bitcoin specifically. And of course, anything Bitcoin positive is good for Tesla because even though their crypto exposure is not really a meaningful piece of their giant market cap, market perceives that it is, and there we go. So, so this is one of these takeaways. The scenario could be that we are reaching a plateau in complacency. I've done some work about the VIX coming to lower levels. And while it's not at the absolute low levels that we saw prior to some of the market blow-ups in the past, on a relative basis, it is quite low. And as we've done plenty of work before, it's lower because of a lack of demand for hedging rather than a lack of demand for speculation. So you got to keep that in mind. Are we seeing sort of a peak speculation? Remember also, we're getting into April 15th, which this year has a bit of a different connotation to it. People can still make their IRA allocations up to April 15th. So you may see some incremental money flowing into the markets out of savings accounts. But then you're not seeing money flow out for taxes, which are not due until May 15th. So there's a weird dynamic here. Does that set us up for sell in May and go away? A little early to say, but if that pattern has held in the past, and then you throw tax payments onto the top of it, that could take shape. But we're a ways away from that. As of now, I would call it the complacency trade. The trade of least resistance holds true. Basically, if you can put a rosy scenario on more or less any piece of news, assuming it is not insanely dire, but I would say that a vaccine being taken off the market borders on that. But if you could put a good spin on news, the market will do it, and we're seeing that today. Have a good one, everybody. Bye-bye.